Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to go with a current affairs topic to set up our content on building financial guidance as a public company. And we're going to look at Delta Airlines, who reduced their first quarter 25 guidance today on March 11th, 2025. And the key here is that they reduced revenue, operating margin, and non-GAAP EPS. And the reduction was about 50% at the midpoint. That's a drastic change, given that they issued original guidance on February 26th, and now it's 50% less on March 11th. And so what it did is it drove an 8% intraday move on a 30 billion market cap stock. Investors were surprised. It shows you that you shouldn't have expected this drastic of a change in guidance this quickly. And lastly, it was done off cycle because it was done prior to an appearance at the JP Morgan Materials Conference. You never want to get into this cycle of reducing guidance outside of the natural quarter points. When you start changing numbers intra-quarter, you enter a real issue. You start to lose credibility, and it typically means there's going to be more reductions to come. So what does the guidance change signal? Well, the first, on the face of it, you think there's a looming recession because in February 26th, the growth was driven by unit and volume, and now you're suggesting that there's a pullback on that strength in unit and volume growth. Second, it illustrates that there's an uncertain operating environment for Delta Airlines. It seems contrary to what I've experienced flying in the first 3 months of the year, but it's an uncertain operating environment. And third, I think what the real issue here is there's a guidance problem, because when I went to dig into the EPS numbers and tying it back to S&P IQ's consensus and looking at the fourth quarter earnings and initial guidance, it seems like there's an error in the baseline or some of the growth rates. I could not fully tie out to this $7.35 in non-GAAP EPS for 2025. So why is this a big deal? Well, first, it's an off-cycle guidance change. They did this ahead of a conference appearance. They didn't do it at earnings. And secondly, it was done almost a month or less than a month from when they issued original guidance. Typically, when this happens, there's some sort of error internal in terms of the mathematics and the process of building the guidance versus some macroeconomic issue. Second, they did an 8K and they didn't do a press release. For me, best practice is to always do both. When you only do an 8K, you're going to catch a lot of investors off guard because they're not always looking for it. They're covering 200 stocks. They may not get that SEC filing as quickly as they'll get the press release. And then thirdly, it's about more than the first quarter guidance. And think about what's being implied here across the second, third, and fourth quarter. You're likely going to see a reduced expectation. So let's get into my view on consensus. Well, you're removing 40 cents at the midpoint. So you're taking consensus, which appears to be 741 on non-GAAP EPS, dropping it to about 7. And in my view, there's more of these reductions to come. And if you really do the analysis, I think the 701 is more like 665. Who knows if this even matters? But here are the key thoughts. I think what's going on here is there's a guidance problem, not necessarily a full macroeconomic issue. Second, do you do an 8K or a PR? Always do both if you want to minimize destruction in your stock price and limit volatility. And third, there's probably more reductions to come in the second, third, and fourth quarter. When you do an off-cycle guidance reduction, you're typically showing real uncertainty in your function of doing this and the operating environment. And that's going to lead to disruption in future quarters until you get to the next fiscal year. When investor relations is too tough for you, it's just right for me. Thanks for watching.